Anyway, so this is exciting. So, Joe, welcome to
Yeah,
Happy Hour. We're excited to have
absolutely.
you.
It's great to be here.
Yeah.
Glad you're here.
So,
And
everybody.
grateful all of our people are coming in. So hello to everyone.
So
Glad
it's
you're here.
less than a week to tax day. So for all of you that are joining us that are tax accountants, and I see Bryce, I know Bryce, you're a tax accountant. Like, thanks for joining. Great time for a break, and it's great to see you. So yeah, so welcome everyone.
Hello all. Well, and so I was just sharing whenever we started that we had a fire in our backyard last night. And so I am drinking early because I feel like I'm celebrating. Well, we got to keep our house. Our neighbors did a really nice job of firefighting in our backyard. We woke up in the morning to a knock, and uh, the neighbor had jumped over our fence and had grabbed the water hose, and we were really
Wow,
fortunate.
that's crazy.
It is
Mhm.
I'm just on water
Cheers.
for now. So
I
I'm
do have
going
a
full
beer.
force.
mm.
I
Yeah,
do
no,
have
this
a
is a great
beer.
beer.
so I was
And
supposed to bring something. I guess I didn't get the memo. So we can pretend this is whatever you want it to be.
it's
This,
beer, Joe.
okay, perfect.
So yeah, so I was telling Liz earlier that I have this really cool cozy koozie.
Oh
Um,
yeah.
and it says Kloptoberfest. And the reason it says Kloptoberfest is my daughter Chloe got married, and she married a man named Brandon Klopp. Yes, she's now Chloe Klopp. But that's either near there nor there. So they had these cozies made for the first annual Kloptoberfest. So I thought that was what I was going to use today. So
That's adorable.
so awesome.
I'm going to share my screen so that
Okay.
way we've got our slides that are popped up here. And this is going to be a very exciting topic. So zero entry bookkeeping. Thank you, Joe, for bringing this topic to us.
Awesome. All right. So am I flipping through these, or are you?
Well, so I can go ahead and start us off with some of our intro slides. And then if you feel like you've got the slides up and you want to be the driver of those slides, I will pass presenter role over to you.
Yeah, I'm fine to just tell you next slide if you've already got them loaded, or I can just
Okay.
speak to the topic however you want to do it.
Sure. So they're all in here. So if you just want to tell me when to advance, I'm happy to do so.
That's perfect.
All right, Heather, you want to introduce yourself?
Yes, I will. I'm Heather Satterley. For those of you that I haven't met yet, I am the Director of Education and Media at Woodard. And prior to that, I have been in accounting for 30 years. I'm a CPA and a tech junkie. So really excited to be with all of you today. And yeah, ready to get this party started.
Well, my name is Liz Scott, and I am feeling very fortunate today to have my dogs in the house. You know, most of you know that I pup sit my daughter's dogs, and so they have already found holes in the fence where the fire has burned up a couple of places for them to escape. So I keep on chasing the rodents down. But I am feeling very fortunate today, and glad to be here with both you, Heather, and Joe. So, Joe, would you like to introduce yourself? Because you've got quite the accolades.
Yeah, I know we don't have to read all those bullets. I think a lot of folks know who I am, but I'm the host of the Scaling Heights Conference we do every June. I've been in this field since the 1990s, about a 22-year run there with Intuit, designing a lot of their curriculum and courseware, helped to produce the first two QuickBooks Connect conferences under contract with Intuit. That's how most people got to know me. And now we head up a coaching program to over 350 firms to develop Woodard's ideal practice model. So yeah, one of which is technology and automation, the topic for today. That's one of the tenets of our model.
Technology
Awesome.
and automation, that just is a growing area, and especially with AI being sprinkled in.
Absolutely.
Well, I want to say thank you to our sponsors. So we have got some tremendous sponsors. Really excited for some of these episodes that are coming up because we're going to be talking about Katana. Inventory has been an area that Heather and I have been searching for a a sponsor in that area for quite a while. We wanted to bring somebody who was very forward thinking, considered e-commerce. And so that's going to be a very exciting episode that's going to be coming up very soon. And then My Task LMS. So many of you who are not familiar with them, if you are looking for training for your accounting firm team, that is exactly who that is. They have got all kinds of training designed for your bookkeepers up to tax managers. So lots of really good individual personalized training and testing that is built into their platform. So you should see them at conferences this year.
Yes, they will be at Scaling New Heights. So we're excited to see them there. This is something that Liz and I, we saw the demo of their LMS and their product, and we were like, where has this been all my life? So it's pretty incredible. So we're really excited to bring them to everyone on Happy Hour. Super exciting.
It is. It's, I love it whenever we're able to bring new apps, and Settle's another one that's like new in this area. So bill pay, purchasing, and financing, those are all really cool things that are all incorporated into one. So Joe grabbed the beer. I did. So
My
I
fake
grabbed for
beer.
both of us. And this is one of those that normally I'm going to say Guinness is my favorite go-to. Today, I just grabbed whatever was cold in the refrigerator, and I call it my yard beer. So my Coors Light.
Well, I think we
Mine
talked
was-
about this before, Liz, but I'm a huge Guinness fan. As a matter of fact, I don't even drink beer unless it's either Guinness or darker. Like I'll try some IPA stuff, but it's going to be, it's going to have to be Guinness or darker. And that's usually how I order it. So yes, we have that in common.
I love a good Guinness on draft.
I'm not a big beer drinker. I will drink beer, and I'm not really sure what type of beer I like. People hand me beer, I take a sip, and I decide at that point whether I like it or not. So,
Well,
but
start
I
paying
like-
attention to its darkness and flavors,
yeah.
and maybe you can lock in on something.
I should do that. I think I like sweet beer. I do know that I like sweet beer, and I like pumpkin beer. Pumpkin beer. I haven't found a pumpkin beer that I don't like yet. So
Interesting.
yeah.
There's a really good blueberry beer. So you're coming to town very, very soon.
I
And so
am.
maybe like I'll take you to one of the local places, and they have a yummy, crisp blueberry beer.
It sounds wonderful. I like blueberries.
But no chocolate beer. That
No
I
chocolate beer.
agree.
those things just don't go together for me.
I agree
Ever
with
had-
that.
Have you ever had chocolate wine?
No.
So
Those
it tastes like-
wouldn't seem to go together either.
It's actually my mother-in-law. She loved chocolate wine, and I don't remember the name of it, but there was it tasted like a liqueur, but
Okay.
it was
Well, then that would make
marketed
sense.
as chocolate wine, and
Interesting.
it was okay. So
A chocolate martini, that's kind of a dessert. Yeah.
yes.
Oh, a chocolate martini. New York, that Hershey bar they've got. They have got a very decadent Hershey martini there. I mean, it's just dessert.
All right. So we're grabbing a
All right.
beer today. Yes.
We
Perfect.
Yeah,
are.
we
We're drinking
did.
beer.
Uh-huh. And then I'm going to go ahead and advance into our slides, and starting with why.
All right. So just kind of build out all these bullets on to tell you bullet by bullet. That's going to help us out both here. All right. And then so perfect. So now the little question marks are when you copy and paste PowerPoints, those little arrows don't come in very well. So that's what that is. It's not like, do you get a reduction in human workers? When you get a reduction in human workers, you get increased profit margins. So now this reduction in human workers is always a touchy subject because, it gets us into this, is automation going to displace the role of the accountant? But I like to table that conversation until the staffing crisis is over, because until the staffing crisis is over, it's an irrelevant question, right? We already have a reduction in human workers. We need to address it with the bots. If the bots start then causing people to not be able to provide for their families, that's an addressable problem at that time. We can help them to develop controllership services skills, financial planning and analysis skills. We can promote them to people who sort of manage larger books of business and curate the bots, tame the bots. Bot tamers could become their new job. that's all nice theory, but once the staffing crisis is over, very few people that we encounter say, I don't have enough clients for all the people that I have in my business. It does happen because you have downturns with your clientele or whatever, but the majority of the industry, the vast majority of the industry, is saying, I have more work than I can handle. So this reduction in human workers, or human lift, if you want to call it, it solves the staffing crisis, or addresses the staffing crisis, and creates increased profit margins. So next bullet is decreased errors and omissions, which is interesting because you would think that without a human, the bots are less accurate, but the numbers don't add up to that. If you have a really good system, something that's designed well as coded well, those are both key things. They have to be designed well by you and deployed well by you. And if they are coded well, meaning you selected a good developer and a good product, statistically, the bots are more accurate than humans. The average human accuracy rate is about 93%. Average. I know that some of you are like, boy, I couldn't live with myself at 93%, but you're not average. So the average human rate is 93%. The average bot rate for a well-programmed and deployed bot is 99.9%. So now you might go, well, then what about exceptions handling? Because that's different. See, errors and omissions are different than exceptions handling. If the transaction exists in a third-party system and the bot is mapped correctly, and the bot's not going to miss this, and it's not going to take the pennies from the electronic digital system and put them in with the wrong pennies into QBO. That's what I mean by errors and omissions. It will create a complete history. It will get the pennies right. It's exceptions handling that we often think is equated with errors and omissions. And that's not the bullet for this, but it's worth addressing here because that's actually the role of the person in the future. That's what I mean by bot taming, to take those sticky situations that the bots don't have a certainty about, or that we might want to go in behind the bots and double check their certainty. That would be exceptions handling. And some examples of exceptions handling is anytime we might even flag it and say with a rule that any time that a receipt is coming in from Walmart or Amazon, it needs a human check, because you can buy all sorts of things at Walmart and Amazon, fixed assets, personal expenditures, and office supplies, office equipment, some of which has to be depreciated, some of which doesn't have to be depreciated. You could have cost of productions. We use Amazon to produce our conference. That's cost of goods sold. We use Amazon to buy more office supplies. That's general and administrative. And the bots can't figure all that out. There's some things you can create that are rules, but that requires a human breaking that down. So the human just needs to know. Anytime the bot's scraping that, I need to get involved.
They do. And I mean, the other thing the important thing that I heard, Joe, that you said is, as long as it's programmed well, and in many cases with a lot of these apps, we're the programmers, right? And so we know the whole adage, garbage in, garbage out. And so that's where we see our clients, sometimes they'll implement a tool that's really meant for an expert to be implementing, and they create a giant mess because they don't understand the mapping. They don't understand the, accounting. I think as we get into AI and it's properly trained, like you said, I think we're going to see less and less of that for sure. With a lot of these automation apps that are, automatically categorizing.
Yes.
And, for the early adopters, of cloud technology and some of these, we've already seen the incredible increase in categories being correct. And
they're getting smarter and smarter. Yes.
They are.
And it is just a series of if-thens with conditions, and the more you can fill in the variables. And I do foresee a day when a bot's going to be able to read the line items of a receipt from Walmart, discern, because it knows so much about Walmart's product coding, that it will be able to discern what it is and be able to reference out. It'll even be able to reference tax code and determine, whether or not this fixed asset needs to be depreciated. Yes, all of that is coming. It's
Mhm.
just not here yet. Yeah.
Right.
And so, but what we're really speaking to, not to get too into the future of bookkeeping, but what we're really talking about in these two first bullets is a different definition of bookkeeping that will eventually emerge. And right now, we are already technology tamers who happen to close out a financial statement every month. But more and more, we're going to be seen as that. And that's not a diminishment of our role. That's a promotion of our role. It's much more sophisticated. It's much more modern, much more secure, much more real time. And as long as we can embrace that this is our role and start to brand ourselves with that distinction. But I really like, Heather, what you said. Just because somebody can go to the open market and buy a bot doesn't mean that they should.
Right.
I mean, there are a lot of people walking out of Home Depot with equipment that they should not be buying. I cringe. You don't want me buying a chainsaw. You really don't. Home Depot shouldn't be allowed to sell me one. It's irresponsible of them.
I think
Okay.
Sandra doesn't want you to buy a chainsaw.
No, she doesn't. So I have strengths, but lumbering is not one of them. All right.
Right.
So, increases in efficiencies, of course, that's more increased profit margins. We kind of spoke to that already, so we can go to the next bullet. This practice modernization is not just about your brand, because you do get a brand bump from this, but practice modernization is also about increased practice valuation. There are two kinds of buyers that are buying firms right now. The most prevalent buyer is buying books of business. There's a lot of money flying around in the room, disproportionate to any point in the history of our profession. So just know that's happening. And so most of the buyers just want to buy the clientele. They already have the tech systems. They already have the processes. And because they're PE backed, or they're very large firms that are reaching down market to acquire smaller non-credential practices, they already have all of the technology deployed. They have their own coders. However, there are buyers who want to buy into your intellectual properties. Those still exist. And what's happening in the top 500 CPA firms particularly is a desire to buy their way into 5 years of R&D, because they've ignored the messaging of thought leadership. They've ignored the messaging of the AI CPA for 5 years now, or 10 years now. And they've continued to treat CAS as this sort of thing we need to do for our tax clients, our corporate tax clients, our bookkeeping, but CPAs call it CAS, Client Accounting Services. Now that's being promoted into client advisory services. That's the new definition of the term. It's taking on a whole new shape. The ICPA is pushing a 5-fold area of client advisory services, of which accounting is only one component. Then you have controllership, business process outsourcing, financial analytics, and fractional CFO. And so now that it's becoming a major trend within the CPA world, and as the AI CPA is accurately predicting it will become the primary profit center for CPA firms, they're scrambling. We haven't done any R&D on this in the last 5 or 10 years, and all of a sudden we have to catch up with the market. Now, if you've developed a really good modern technology stack that maximizes automation of the accounting process, a firm like this is going to look really hard at you, and they're going to provide probably a greater than benchmarked valuation for you. Right now, the benchmark is typically about 1x revenues, but if a firm is desperate enough to get your 5, 10 years of R&D, who knows what they might pay you? 2 times revenue, 3 times revenue? It all comes down to how modern you are and how desperately they need what you built. So that's what I mean by practice valuation.
I have a question for you on this topic. So you said that right now, I agree with you 100%. These firms that haven't been paying attention and want to take the fast track to, automation and be able to service these clients in a really efficient way are buying these practices that already have these systems in place so that they can, integrate them into their firms. I'm thinking that there's a very limited window of that being the case, because once these firms start to integrate this technology and this IP that they're purchasing into their firms, the value of the firms that are looking to sell could actually be diminished, right? Because like you said, the big firms that have the technology and have the processes already in place, they just want the clients. So what do you think the window is
Yeah,
for the
that's
industry?
that's the right question, and it's not a very long window. I mean, nobody can see the future, but I would say that if you're looking to create this kind of disproportionately higher valuation based off of all this you've built, um, you're going to want to try to transition your practice within the next 24 months. Because see, I'm not saying that you couldn't find a buyer after then. I'm saying the bubble, in my opinion, is going to burst in no more than 24 months on people buying intellectual properties. Now, now there are always exceptions. Again, it could be somebody in the top 500 that still has their head in the sand, or it could be somebody who is aggregating the market, and you're the one that will help them build the systems to scale. So you're sort of the first domino to fall in their market aggregation. I'm just saying that it all comes down to a game of numbers. And right now, the vast majority of buyers are already buying books. It's already the much harder
Mhm.
task to find the person wanting to buy the IP. It will only get harder over the coming months and years.
And that, you know, that sales valuation will diminish. That's the big thing that's gonna start to
That's
diminish.
really it.
Yeah.
It's your valuation at the time of sale.
Yeah.
So what does that mean for you then? It means that if you're looking to exit, and I don't mean to make this an exit strategies course, but it's impossible to separate technology from valuation anyway, which is the point of this bullet. But if you're looking to exit, then you need to focus, and you're looking to exit imminently, you need to focus on what the buyer of a book of business is interested in, which is who are your clients, how are they priced, and what services are you offering to them? Are the services beyond just record keeping? Are you doing controllership? Are you doing FP&A? Because then that's a pre-qualified book of business where they can continue to offer these higher end services, expand the portfolio of them, the upsell, cross-sell potential, and the potential for very complex corporate tax returns and maybe some wealth management. It's all there. If you have the kind of business that's serving a smaller mom and pop clientele for whom you're just doing record keeping, to delineate that from some of the higher end kinds of accounting, then most of the people that are spending money in the space right now are not buying those portfolios. But again, I'm happy to come back and talk about mergers and acquisitions, but I think we've talked this bullet to death. Liz, next one. So the competitive advantage part, now this comes back into the modernization, but this is the way you've got to play it with your audience. There's a catch-22 in saying that I am on the bleeding edge of automation, because a lot of buyers still buy off the prospect of your cost equals your value. And we have trained the market for the last 30 years, 40 years, 50 years to say our value is based off of our effort. So to flip the paradigm of that, you have to say, you have to purport with your brand, not we don't have people keying your entries in, because then they're just going to want to pay you less money. What you need to purport to the market is the positive aspect of this, because your value isn't based off of your effort. That's hopefully assumed here in the room. Your value is based off of your outcomes. So you're going to generate the same outcomes with or without the automation. But the competitive advantage you can present to the market is we are modern, we are real time. That's a huge component. And you can define real time however you want to, but it's something less than 12 times a year, 2 weeks after the fact. I mean, it's something more than that, more frequent than that. So by telling people we're going to maintain accurate financials for you, or at least accurate data points more frequently than 12 times a year, 2 weeks after the fact, that's a huge practice distinction. And it's automation that gives you the pathway to that. So modernization, data security, and real-time data points are all coming from this why. Okay, next bullet. All right, I've actually talked to some of these then. Keep through. So yes, so the pricing leverage and then the stronger growth potential I had not spoken to, which is your business is now more scalable and you can service people with, you can use those higher profit margins to invest back into services expansion, higher value services and so forth. Now this client experience is huge. My phone's here on my desk, which some of you that, you know, you're like, wow, Joe, did you happen to put your phone next to you because you wanted to make a point and have a prop? Nobody is surprised by the fact that my phone was reachable. And no, I didn't script that. I didn't have to say, hey, you know what? I need to make sure to make my point on the happy hour at 4 o'clock Eastern today that I have my phone within reach or I can't make my point. I need my prop. No, it was just here. And I bet you that everybody that's listening to this meeting right now, you're within arm's reach of your phone because that's the way we live in the modern world. Exactly. Never more than arm's reach from your phone, which means that if we're providing a client experience that is appropriately accessible and relational, how do I have a relationship with my daughter? Well, I can tell you, she sent me a text about 1 minute ago that wants to know where her high chews are. That's how I have a relationship with my 16-year-old daughter. It's through the phone. She's 16-year-old, and that's how I communicate with her. Well, if that's how the clients are also conditioned to have a relationship with us, and we haven't mobilized our experience with our clients, then we're missing something. We're not engaging them in the world that where everybody else engages in meaningful relationships. We're still using a portal on a link on our website. Very 20th century of us, isn't it? Or what if we were to tell them to email us? Equally 20th century. I might as well just go ahead and give them a fax number. We need to be in their phone, but not with text. We need to be in the appropriate distancing is to not use text. It's not even secure. It's to use an app that will allow us to have a relationship with our client through the mobile interface. And it doesn't have to be branded to us. You know, we pay bigger bucks to say, here's your Scaling New Heights app for 4 days. It could be an app that's branded to the developer. You just have to pick a good app. You know, names come to mind like Liscio or Client Hub. Canopy has a really good mobile app. But be the advisor in your client's pocket. You know,
and just to clarify what you're saying is that yes, our clients are mobile and they're using their easiest devices, which are phones, but you're not saying text because we don't want to train that behavior, but instead use a tech that has
bot.
text, built into it, a chat bot that feels like text. It feels like
you can still take an image, take a picture. Sure. It's just you're sending it through a secure channel. Instead of sending it through a text. And then,
in that kind of case, your entire team can see it and everybody can
absolutely. And that's where I was going to go next because the system is part of my tech stack, my architecture. So if I'm using something like Canopy's mobile app, it's going to, or Liscio or Client, but any of these, it's going to route it through into my workflow. It's going to place it into the proper place. It's going to do it all securely and the team has visibility. But it also means that it's not a text, so I'm not expecting a reply. My daughter has texted me again. It's only been a minute about these high chews. She'll figure out in a minute that I can't answer her right now about her high chew candy she can't find. But she's expecting an immediate answer. And we don't want to train our clients to expect immediate answers at 9 o'clock or 10 o'clock at night. So the distancing of using this separate app, we can set our own rules and our own boundaries around it. We'll get back to you the next morning, you know, or during normal business operating hours. But they still get the enhanced experience. All right, next bullet. I've already talked to all those. You can keep moving. Yep. All right, good. So now in these categories of 0 or near zero entry, everything that you see here, I have found has already achieved near zero entry or zero entry. and we won't have to read every one of them. It's just an exciting world we live in. Now, invoices, estimates, sales orders, and purchase orders, you might go, well, wait a minute, of course, my client is still key punching those in. Yes, they are still key punching those in. When I say zero or near zero entry, this is an address to the professional bookkeeper. This is not an address to the client. So what I mean by these bullets are you don't have to do data entry because the client is key punching in their own purchase orders, their own invoices, their own estimates, and their own sales orders. All right. The client is key punching in their, the bills are automated by solutions like you shared here at the beginning of the thing, but there's a whole category of data parsing. And a couple of solutions have gotten really good at reading the line items off bills and coding at the line item level now. So I would take a look at some of those. And I don't know how many, I don't know what the rule is here on saying the names of software products. Is that okay? Yeah, so Plate IQ does a really good job at line item reading. So does Avid Exchange, but they're not the only ones. And I'm not paid to mention names here, by the way. I want to make sure we're clear. I do not get paid by any software companies for shout outs. That way I'm always telling you what I really think. So the e-commerce and merchant, there are integrator apps now that will take these omni platforms and pull them all into a single interface with a single set of mapping. You want to take a look at some of those like A2X and Bookkeep are all really, really good examples of those. So that's if you could screenshot that or go get it wherever you guys disseminate the resources, lean into every box on that slide to maximize the zero entry dream.
And the slides will be available, everybody, on our website by end of day tomorrow for sure.
And then Sarah's saying Makers Hub does that too. So that's exciting to know. Great. Yeah. All right. So we stopped sharing. Are we out of time?
No.
Okay.
No, I was resharing so that way we have some of our automations that kind of help us advance a little faster.
Oh, perfect. Okay. So if we want to move, then I don't need to go through everyone. Oh, I do want to speak though to the corporate renewals and the foreign state registration. That's automated now through products like CorpNet.
Mm-hmm.
So, but keep in mind that that's not a bookkeeping function. But when I mentioned the 5 areas of client advisory services, back office process outsourcing is one of the 5 areas of CAS. And if you were going to get into some of that, then this is a way you can automate back office process outsourcing. Increasingly, there are solutions that are automating accrual basis entries. So you can look into those, loan amortization, lease management, and even payroll accruals that integrate with several payroll solutions are all now this is more bleeding edge. It's harder to find everything you need in a single solution. Just understand that innovators are coding away to solve this because this is where the top 500 live. They live in GAAP reporting, and they need to be able to automate those month-end entries. 401ks become a exploding territory of automation, whether you're PEO or not. Some of them are just like 401go, just standalones, human interest.
I love, Joe, that, we have these companies, we talk at Woodard about the app-enabled services that we can offer. And I love that because there's some things that we can't do as accounting professionals, but we can still offer it to our clients through these partnerships with companies like CorpNet. Like in the state of Rhode Island, we're not allowed to file an annual report for a client. That's considered per our, society, our Board of Accountancy, the practice of law. And so each state is different, but I can offer that by partnering with somebody like CorpNet and just refer my clients over to them. And now I'm fine. My hands are off, but they're still getting the service through me.
Yes, and thank you for bringing that up too, because yes, there are regulatory constraints on some of the things that we can do, but that's where CorpNet would stand between you and the client as just now your arm's length.
Right.
Absolutely, very good point. So we can move to the next one, the next slide. So sample automation solutions, again, I've mentioned some of these as some shout outs, but this is not an all-inclusive list. These are just some examples. That way you kind of know where you can begin on your exploration. So if you want to explore some of the ones on here, and again, I'm not paid to include anything on here, and this is not all inclusive, but you can go out to Google and you can go, well, what are some auto entry or hub doc competitors? And you can use these as launching pads to investigate the whole category that way with Google. Yep. And then what I will tell you is, back one slide, the people that manage employee onboarding better than anything I've ever seen is Rippling. What they're doing with automating employee onboarding is revolutionary. I do think a lot of the other players are going to catch up because Rippling is setting the bar, but boy, did they set the bar high. I mean, even technology provisioning for new employees is being managed by Rippling. So I would watch them as a market leader in employee onboarding category, not necessarily payroll processing, though I don't have any reason to think they're not doing a good job, but where they have really set the bar is in that onboarding piece. All right, so the next slide. Now, these, I just ran out of room, so these are the other ones that we were talking about. Wolters Kluwer acquired the CT, which has done this foreign state registration compliance for a while, so it's now Wolters Kluwer doing that. I do want to provide an update, though. FACTA is no longer in the accrual basis entries category. That's been changed even within the last 6 months, so just make a note on that slide. But Blackline is doing great work in that area. They're a little pricey, but if you're selling your services at the price point where somebody that needs real-time accruals would value it, Blackline becomes affordable again. It's all relative to price. All right, so the next slide. All right, now these are the ones that will not get you to zero or near zero entry. These are our Achilles heels, right? And this is where pipe dream versus possibility starts to get pressure tested. And maybe it feels a little pipe dreamy that we can have a complete set of books without a single keystroke. Because those line item details on those parsed documents, and I say non-payables because increasingly, like we've talked about, the payables category is picking up the line item details. But the scanned receipts, like the Walmart example I gave, we're not there yet. So that's going to require some human touch. The credit card charges and credits. I know that, and I don't mean by that like a credit card statement like American Express. It's about the full automation. You can integrate the credit cards and the bank statements into the general ledger, but you're still going to have to manage the bank rec. You're still going to have to do the matching. You're still going to have to figure out where the missing pieces are, and you're going to have to figure out why it doesn't tie to zero. That's always going to be a human touch. So the bank reconciliation, the checking disbursements, and the credit cards all kind of fit in that same umbrella of we still have to get that closeout done. And there's so many variables there. Where it's highly manual are these mailed checks. I mean, I still get my fair share of them. We're a virtual office. I've got 22 employees in 15 states, and we just upped another state this week. But it doesn't mean that I don't still have to get mail. What it means is there's nobody in my office to receive this mail. It's me. Every time I get a paper check, I am the one that has to deposit it into the bank account personally, because I have no office. I have nobody I can just walk that check to and hand it to them. So I feel the manual pain of these paper checks intensely. Now, where you could work as a service provider to make this zero entry is you could just require it in your engagement letter with a client. All paper checks must be mobile deposited through fill in the blanks bank mobile deposit app, and put the onus on them. Make them have to do it. But there's no way on earth that anybody listening in on this as a professional bookkeeper should be having to deal with paper checks. Okay.
Yeah, it was funny because I have a local not-for-profit that I have through my QuickBooks, my QuickBooks subscription so they can get the lowest rate. And I bill them once a year for their subscription. And they mailed me a check. And I kept sending them reminders because I never get paid via check anymore. And so I had to go back through and I had thought it was junk because I
Mhm.
never get paid via check. And I did finally find it, but we get out of that habit. And just a couple of other, the slide that you were showing with some of the technology. We have some great e-commerce companies now with us. Like we have with our we have Dex Commerce. So Dex Commerce is now being offered, and that is they're offering e-commerce. And we've had SPS or not SPS, Commerce Sync on before. And
Mhm.
keep there's a lot of great players out there. And we're seeing a lot of innovation too with the merchants services. Like Forwardly was on Appy Hour. They're making same day payments accessible for businesses, not just for individuals, right?
Yep.
For consumers, but for businesses. So that's a big one as well. And I think we're seeing all kinds of innovation in that area with, the pay. When you check out now, you can select a payment plan, right? And these companies have now made that data entry into our accounting systems automated. So
Yep.
we've seen a ton
But getting to Bryce's comment and kind of all my comments about the limitations, it still always requires the lion tamer,
definitely.
technology tamer, and that's not just an essential role. It's also a bit of job security for us. The question is just how do we scale it, which is what we're getting into in the second segment. Is how do we scale this automation so that we're taking on a large enough clientele by leveraging it that we can still create the revenues to support the technology tamers and the research we have to do. Plus, if we're developing apps where it's not just research, it's development, right? So we've got a pretty big lift here in the technology taming business and the exceptions handling business that requires a roadmap. So let's get into this one. All right, Liz, next slide. All right, so let's just build these one at a time. If you want to build the whole square one at a time, I'll speak to each square. All right. So mapping of the processes, when you're mapping processes, which is your path to standardization as well as your path to automation, they're all wrapped together. So, so when you're mapping your way to automation and standardization, you can't automate a process that doesn't exist. But at the same time, the technology that you are automating informs and even dictates the processes we follow. So if you try to do these in a purely sequential way, where you're going to say, I'm going to map all my processes, then go hunt for automation tools, it doesn't work. But the inverse is also true, which is why if I had to place it anywhere, I went ahead and put process mapping ahead of automation as a caution. Because if you try to just go out and buy a bunch of technologies and you have no processes, you have no workflows and no workflow solution, you have no plan, then you're going to end up patching together body parts and building like a Frankenstein monster. It's just going to roam everywhere, killing villagers. So, so let's go to the next square because they play together. So when I've mapped the processes and automated the processes, I'm going to do those not purely sequential. I'm going to do those in a symbiotic way for these first two, right? But in the process of mapping, I'm determining my ideal client profile because that informs the technology that I invest in, and I can vet the software, qualify the software based off of that. So when I was mentioning, for example, Plate IQ, well, Plate IQ got its start in the restaurant business. So before they broadened, and I believe they've since changed their name or are about to because they don't want to be branded to the restaurant industry. But back when they were restaurant industry only, if I determined my ideal client profile based off of my processes and what works best and most efficiently for my practice, then I might said, well, Plate IQ doesn't work for me because I'm only 10% restaurants, or I'm not going to scale my processes around restaurant needs. Now, I want to make sure we're clear that's not their current go-to-market strategy. They address the needs of everyone now, but it's just a point that I'm making. If your processes don't inform that you're going to lean into e-commerce, then you probably don't need to spend a lot of time qualifying A2X or Bookkeep, things like that. And it may be cost prohibitive for you to deploy automation technologies unless that automation addresses some double-digit percentage of your processes. So all that's speaking to software qualification. But then whenever you are automating, you do want to automate holistically within a category. And what might then counter-inform is I may not want to, once I see how profitable I am with AP automation or e-commerce automation or whatever it may be, I may decide I don't want to sustain that portfolio that doesn't fit the automation. The outliers that don't fit my A2X or my Bookkeep, I'm going to just lean into more e-commerce, maybe even sell off the portfolio that's less profitable for me. So they're just, but the bottom line of this is once you've mapped the processes and automated them, hours no longer equal dollars.
Right.
You're making monies disproportionately to effort. And that's the key takeaway.
And Joe, I love what you said about, the mapping the processes, because I'm always like map, map processes. But I love what you said about, it's kind of like the tail wagging the dog sometimes, right? And that I think it's the key here is figuring out what the need is.
Mm-hmm.
Right? And I know when I did my, my coursework in innovation, they talked a lot about latent needs, right? Which are the needs we don't even know we have. And that's where when we're seeing new technology and we get that, that kind of jolt of like, wow, I didn't even imagine that it could be this awesome.
Mm-hmm.
That is the technology or the innovation speaking to the latent need we didn't realize we had. So I agree with you 100% that you do have to do them in tandem. But I think what it comes down to is you got to understand what you need and then keep an open mind as you're looking through to see.
Yeah. And don't overbuy on tech, right?
Right.
Yes, you can get technology heavy, but yes, absolutely. They're innovating constantly, and they've got tons of PE dollars and thousands of clients, many of whom are accounting firms informing into their R&D. Why reinvent those wheels? All right, the next box is to document everything. So notice that I put this third, and this is what's daunting for a lot of people, is they equate the mapping with the documenting, and that is not the same thing. Documenting is more about standard operating procedures and checklists. It's about microscripting. Mapping a process is much more broad stroke. You might only have 10 or 15 key things you do for any given client every monthly cycle. That's what I mean by mapping. But and I'm not saying you can't get more specific than that, but with documenting, you're thickening it up. You're saying, now that I'm going to map, the next step in client A is to do the bank rec. The standard operating procedure, the documentation, will be the SOP for all bank recs for all clients. And you can write a bank rec SOP once for your practice with a few variables client by client without having to write a bank rec process for 100 different clients. Understanding this distinction will help you to fold in the technology, which is the topic of today, but it'll also make this whole mapping and automating and documentation thing less daunting. It'll put it in its proper context. Now, Heather, you have a lot of materials on that, the difference between workflow and SOPs and the different levels of mapping processes. So I know you probably covered that a lot on the show, but once you've documented, you democratize the knowledge, but you democratize the adoption of the technology too. That's the team ownership piece. If people aren't equipped to use things consistently, if they're not trained in how to do it, they simply won't. And a lot of times it's because they're well motivated. They want to get the job done. Between them and producing a good outcome for you and the client stands their inability to use the tech. So they're going to go around the tech. They're not being rebellious. They're actually being responsible. But the way to bridge that gap is to train them like my Task LMS does, right? To train them in very specific ways to use the tech and to coach them through its adoption. So the next one, and by the way, if you want documentation in a box and mapping a process in a, my Task LMS is really going to take care of a lot of boxes 1 and 3 for you. It really is good. Okay, so recruit. Now, I'm not saying don't hire anybody until you've gotten the first 3 done. I'm saying scaling a team without the first 3 is a formula for fracturization. And it's the reason a lot of us don't have a bookkeeping practice. We have a bunch of bookkeeping practices under one roof because we just hire experts. We throw the problem at the experts and we don't write down how it got there. As long as they're hitting their billable production numbers and the client's happy. But are we really knowing how they're getting it done? And is this something that, you know, is appropriately dependent on them, but not so dependent on them that if they quit, they gut us, right? And are we creating and measuring adaptive capacity? Are we increasing the value of the practice? If I'm basically just a fancy WeWork office for a bunch of bookkeepers to come down and sit and work on my clients in their own ways, I don't have practice valuation. All right, so the next one. Now we democratize everything through over-managing. That's a Disney term. So we over-manage the adoption. We make sure that there's adherence to the SOPs. We're constantly, next box, perfecting those SOPs so that we're getting better and better, fewer and fewer errors and omissions, and more sharing of knowledge. Now, all of a sudden, if a person quits or goes on vacation, the ability for their team members to come in and grab that, including all the automation technologies they're using. Plus, if you'll see in the improved thing, this is where we fill in the gaps on what the automation doesn't do. You know, Zapier would be a good example of that, because not everything, think of Zapier as those little bridges in the country roads that take you over the streams, right? It's just filling in those gaps where you otherwise would get stuck. But be careful with this, that you notice I put it as filling in gaps between the technology other people are developing. Resist the temptation to go develop your own process automation and your own production automation, because once you get very good at solutions like Zapier and other kinds of low-code platforms, it will become tempting to overcode. And just remember, for every line of code, even if it's low code that you write, that's a child you must feed. You must constantly curate it, nurture it, and all of a sudden you've become a quasi-software company, but you're not positioned to do that. All right, so the next slide. So let's just go ahead and build this one whole out, because I know we only have 5 minutes left or so, but so the adoption ramp for your clients and your team, it may not be the ideal for you to increase productivity, but it's about what's adoptable, right? So for you to do bank feeds, for you to do e-filing of 1099s, for you to map imports through credit cards and other financial institutions, banks, for you to do the integrating of existing operational solutions, like, you know, maybe they use Katana already. They just didn't know it integrated with QBO or didn't know how to make it happen. Or maybe they use something that doesn't integrate with Xero or QBO or whatever you use, but you know how to use QB Importer, right? And you can bring that data in. So when you're taking what they're already doing and just streamlining the way it gets to the general ledger, that's the first place you should automate, because the client is the greatest point of resistance in this process. Because now your learning curve has been multiplied across all the employees at all your clients' offices. So the light learning curve for the clients are the sales tax outsourcing and the payroll tax outsourcing. So if they're going to adopt something, you know, some payroll solution like Gusto or whatever, or Avalara or whatever for sales tax, if they're going to adopt those, yes, they have to learn how to manage these things differently, or they have to learn how to collaborate with you differently. But you are carrying the lion's share of the adoption and the curation of these solutions on their behalf, and you should be paid well for that, by the way. They're still a somewhat arm's length. Now, when you get into accounts payable and accounts receivable automation, they are in this fray with you. They've jumped in the foxhole, right? And therefore, you're probably going to want to take the accounts payable automation and move it to the third domino that falls. We like to start with this one, and I'm not saying it's not a good place to start because it takes care of the paper checks and the bill parsing and all of it's great. But that's a client who's tech savvy, ready to take on the new challenges, highly coachable. If you're talking about somebody that's barely holding it together with technology and you want to throw Tipalti or Bill or Optimize or any of these solutions at them, you're going to break them, right? Especially before they can start seeing the value of some of these lighter lift kind of topics. Document fetching and parsing is another example. Dext, if I'm going to have them use Dext, they're going to have to learn. It's a habit thing. They're going to form new habits that every time I create a counter transaction, I open Dext, I take a picture of the receipt. Come on, that's going to take months to get their team trained in how to do that correctly. If you start with this box, it's going to take you months to get some of the leverage and benefit of the automation. Let's make it the third one that falls. Now, by the time you get into, say, an expense management solution that's managing like RAMP, all of their expenditures or bill expense, all of their expenditures, and automatically filing in all the approval level expense reports, when they're picking up some time tracking, even if it's inherent to QB time tracking inside of QBO, this is the highest level of lift for your client, because now it's not just their back office that must adopt, it's 100% of their employees. And think about that multiple, and we get frustrated with the client because we'll just jump straight in and go, well, let's just go straight to name the expense app, because we know that it's going to make the biggest difference. But we haven't nurtured the client to that point, and we're saying now all 50 or 100 of your employees need to get on this automation bandwagon with me right now, snap of the fingers. We're setting everybody up for failure. All right. This is the hardest lift on this right-hand side.
Well, and I appreciate this conversation, and where you're taking us is this idea of we've got to adopt, we've got to do it intelligently, and that we've got to do it at a pace that makes sense to the market. So, my encouragement to all that are listening is that it doesn't really matter how much tech that you're adopting, but you've got to adopt something. You've got to be able to stay current in all of these apps that are out there. And Joe, I feel like we could have you talk for a whole other hour.
But I think I did kind of get through the adoption thing, so I think I got done by 5. Yeah.
Well,
You did. And there was.
Go ahead, Heather.
No, Joe, you do such a great job. Especially, we didn't get to the vetting the software or vetting the application.
Well, that was actually intended as a bonus supply. That was a bonus resource for your listeners. They could just run those slides as a vetting checklist. I didn't need to talk about every one of them.
Awesome. I love it. I love it. So you definitely want to go out to the happyhour.com tomorrow and download those slides, because there's some really, really amazing information in there. So thank you for that, Joe. We really appreciate it.
I appreciate this conversation, and we've got a lot of comments, so I can tell that whether we're talking about valuations of your firm, what you should do if you're thinking about somebody who wants to sell your firm, how do you communicate with clients, how do you adopt tech, and even that, being discernment in choosing the tech. I think all of those are really great conversations. And these slides, many of you have not seen that entire deck. So I'm going to say, like Heather said, make sure to go ahead and download that tomorrow, because there's a lot of really good information.
Definitely. And I did have a quick poll. Is it okay, Liz, to launch our poll?
Absolutely. Go ahead and launch that poll, and I'll probably talk while you.
This is about our conference. Thank you.
It is about our conference. Yeah. So, which we didn't get a chance to talk about, but for those of you that haven't attended Scaling New Heights, you definitely don't want to miss it. That is actually where Liz and I met. And it is, I started attending Scaling New Heights in 2014, and it literally changed my life. I say it all the time, Joe, that I would not be where I am today without attending Scaling New Heights and what you've done for our community. So you definitely want to, if you have not been to Scaling New Heights, you definitely want to say yes to that poll, and we'll get you some information on how you can attend.
I 100% agree. I think that I went from sitting in my own desk with blinders on